Guys, what's up? Welcome to video number 1 of our 4-part masterclass that we have coming in November. Thank you so much for tuning in. We're going to learn a lot today. Anyways, I just wanted to personally welcome you to this video because we're going to get into some real awesome stuff, and I'm not going to hold back. I'm going to try to over deliver and share and teach you as much as I can. So if you're ready, please have a notepad and we'll jump into this. Anyways, let me hide my face. I'm going to go through some slides and then I'll share my screen and then we'll actually get into the thick of it. So here we go. All right, guys. So in this video, I'm going over my exact trend following strategy to beat the market safely without having to guess tops or bottoms, losing a lot of money, or being stuck to the screen all day. And so this is beginner friendly. So if you have never been in the stock market before, I'm going to walk you through everything step by step. All right, guys, so trend following is the only way to reliably and consistently profit from the market, and that's what I'm going to show you in today's lesson. And it's also the best way to follow the trend is by using the TDBS system, which is the exact system that I'll be teaching in this video. So not only am I showing or telling you the best strategy in the market, but I'm also going to show you exactly step-by-step how to do it yourself. All right. So again, what is trend following? Trend following is the idea of following strength in the market, of catching big waves and following the big money so that we're not trying to guess and trying to catch tops and bottoms. And again, this has been working for over 2 centuries. We have a report here that was done that literally compiled 2 centuries of research of trend following to prove that it worked. And we also have a more recent one that did a century of evidence of trend following investing, and literally it shows that it outperforms everything else around. So I'm not just making up these numbers. These are actually based on cold hard facts. All right, so as we can see here, here's also another example of trend following. Again, I will get more into this in a second, so please stay tuned. But you can see here that the Dun composite is a trend following composite versus the S&P 500. So as you can see here, not only does it outperform, but it also suffers less risk during these hard times. The market does not crash as much, and so because of that, we're seeing greater and improved performance. So as you can see, this is kind of what we're seeing. And so again, overall trend investing and trend following does work, and I will show you how to implement that today. Again, you can also briefly see here how trend following has done and performed during periods of crashes. You can see here World War I, the Great Depression, stagflation, the financial crisis. You can see here how it has outperformed general investing. So again, this is something that is based on data and research. I'm not giving you something based on hype or emotion or guessing, but I'm actually going to show you the cold hard facts of what is working and what has been working for literally centuries. All right, guys, so a little bit about me before we jump into this is I've helped over 5,000 people master trend following and more easily profit from the market. As you can see here, here's an example of one of my trend following courses. You can see here that literally almost 6,000 members in it. You can see here testimonials of people that I've worked with from all over the world, from Estonia, Scotland, the United States, United Kingdom, Germany, London, literally people all over the world who I have helped. And I know because I've helped them that I can help you too, especially on this training. So make sure you stay tuned and take some notes. All right. So I have over 300,000 people who follow me on social media for daily stock market updates and stock tips. So I'm not just some random dude. I also use trend following myself because one, I'm never going to teach something that I don't actually do because that's just wrong. So it's something that I do myself and I use to safely beat the market. And I've also been asked to talk on podcasts about this as well. So you can see here, I've been talking on different types of podcasts and stuff like that ever since I was younger. So for a few years, I've been talking about this, and it's awesome to share and talk about this stuff. And that's why I'm excited to be here today to actually teach this content to you. So I've tried almost everything from drop shipping to affiliate marketing to day trading to options trading to investing and now to swing trading. So what I'm saying here is how many of you guys have been in a position where you want something better for your life? You want a better financial future for your family. You just know you're destined for more, and you know you can do better. And you just want an overall peace and security when it comes down to your finances and to your investing and to your trading, right? We've all been there, and we've all tried crazy things, right? My parents, when they were younger, they wanted this for themselves too, and they tried things like MLM marketing. We've all tried things, and I want to show you that the best thing you can try today or do today is this. I'm going to show you exactly how to do it. So I almost blew up my account twice trying to pursue day trading, and another time trying to swing trade. And so that is all because I did not have the right strategy. Guys, if you don't have the right strategy, you will not succeed. Most people on YouTube teach a strategy that is simple and that is easy so that they can get you to buy some course or buy something. Well, guess what? I'm going to teach you everything you need to know in today's video for completely for free. But not only that, this is a strategy that literally has centuries of evidence and research to work. All right, after almost blowing up my account twice and feeling like an absolute failure because I had to explain to people that I was losing the money that I worked so hard to save, I then came across the idea of trend following at a money show conference. After I heard about it, it made so much sense that I literally dedicated my time to master it. So I heard about trend following, they explained it, and I was like, oh my gosh, this is it. This is the thing that will lead to like literally my success, and I know if I can do this, then like anyone can do it. And so because I knew that, because I saw the data and the proof behind it, I had to master it. And so that's kind of led me on the journey of trend following. And so trend following is buying a stock that is in an uptrend and selling it when it isn't, because a stock's job is to make you money. So why would you hold it if it's not going to make you money? This is the quote that I heard, right? When we put our money in something, we want that money to grow, right? We're not just putting our money to play around. We're putting our money to give it a specific job to make us more money. Right, that's why we're investors. That's why we're traders. We're hoping to make money on our money. But I see so many people chasing stocks that are continually going down, chasing the bottoms and trying to catch it, and then instead it just drops further. And I know that we've all been in that position, me included, right? Where you buy a stock and then in the next minute it drops, and you just feel like that if that you should be taking the opposite position of what you want to do, right? You're like, if anyone just took the exact opposite trade that I did, then they would be making money, because every stock I buy goes down. And I was in that position too, until I realized that, guys, there are stocks that are already trending up, and there are momentum and movement to the upside. We need to follow the big money, and that's the way to make money, is to find a stock that will actually make us money in return. And so researching this topic led me to the story of the turtle traders, which is really cool. So Richard Dennis is a very legendary trend follower. He's doing really well. He turned $5,000 into, I believe it was like 10 million or something crazy, which is in that time, back in the 1980s, was amazing. And so he is regarded as one of the best trend traders and trend followers around. And what he said is, he was like, guys, I believe that anybody can learn this system and make money and can be a successful trend follower. And his friend said, you know what, Richard Dennis, I completely disagree with that. That is not true. And so he said, bet. And so what he did is he published an article in the Wall Street Journal. He published an ad saying, hey, no prior experience needed. Come work for my advisory firm or whatever, and I will teach you how to do this and whatever. And so basically he hired 14 people off the street that had a variety of different backgrounds. Some were teachers, some knew math, some didn't know math, some were good at English. Literally everybody, like anybody you can think of, he accepted. And so he had these 14 people who most of which had no prior stock market experience. Now you can see here that their returns. Here are the 14 people, and you can see here their average annual return: 124%, 114%, 107%. Guys, who here would love to make 100% return every single year? Who here would love to double their money every year? If you have 1,000, then you're going to have 2,000 next year, and 4,000 next year, and 8,000 next year. Do you not see the power in that? This is the power of learning how to increase your returns safely. So you can see here that we have a 107%, a 94% return. Guys, even the worst person had a 38.9% return. That is literally insane. Like, that is 3 times the market average, if not 4 times. And as you can see here, during the same period, the market did a little under 20%. So again, it is vastly outperforming. And so I just wanted to show you that literally you can be taught this, whether you have no experience at all, whether you think you're bad at math, you can't read stock charts, whatever it is. Guys, it has been proven that this can work for you. Trend following is very simple and is literally a way to profit regardless of how much experience you have and like how much knowledge you have, because it's just a very simple method to follow. And that's exactly what I'm going to teach you today in the TDBS system. So after spending hours each day and almost a year of my life, I finally developed a trend following approach based on Richard Dennis that actually works. And so let me share my screen and jump into it, because I know you're tired of hearing about me and how trend following can change your life and trade your trading. And so I'm just going to stop talking about that and actually show you how to do it. But before we jump into it, I kind of want to give you the game plan of what we're going to cover. If you have not taken out your notepad yet, do so. Put your phone up, unless you're watching this on your phone. But make sure you're you're in a no distractions environment. Because guys, literally what I'm about to teach, I have charged a lot of money for, and I'm going to give it to you all for free. So make sure you are paying attention. And yeah, so this is good. This is going to be some great stuff. So topic game plan. Number one, we're going to go over the TDBS system. I'm going to explain how trend following works based on this. I'm going to give examples if you are an investor, a swing trader, etc. So you're going to learn exactly how this works regardless of the type of person you are. And then I'm also going to do something which I don't share a lot because this is literally amazing stuff, is using sector rotation for an unfair advantage. And trust me, I'm going to explain this in depth, and it is amazing, and you don't want to miss out. So if you haven't already, take out a notepad and let's jump into it. So let me share my screen and let's get into it. So here's an example of the S&P 500. Let me remove this real quick. So we're going to walk through the TDBS system. So I'm going to walk through each one step by step. So T stands for trend. All right, so we need to identify the trend of this stock. All right, so what is the easiest way to do this? It is going to any platform. So right now I'm using the TradingView platform, which is tradingview.com. You don't have to create an account. You can use it completely for free, but you also have a broker account that you can use. You can go to Yahoo Finance. You can go to any platform that will show a stock chart. And so again, I'm using tradingview.com if you want to follow along on there. But essentially, basically what we're seeing here is we want to assess the trend. So TDBS, T stands for trend. And how do we do that? Well, we get a stock, we change this to 1 day, or basically you change it to whatever time frame you want. You zoom out over a long period of time, and what you're looking for is you're looking for the stock to go from the bottom left-hand corner to the top right-hand corner. A very simple way to assess the trend. If it's going from the bottom left to the top right over time, we know we have a stock that is trending up, and that checks our first check mark of the TDBS system. So again, there are also other ways to identify a trend that I want to show you as well. Even though that is a very simple way, if you want to know more, let me explain that here. So we have what is called a moving average, which basically just shows the previous price history, and we can go to a moving average. We can change the time length to 200, and we can assess trend that way as well. So you can see here, if the stock is above this line, we are trending up. If the stock is below it, then we are trending down. And what we'd be looking for here is we're looking for a stock that is above this line way more than it's below. So as we can see during this almost 2-year period, it is above this line way more than it's below. And so that would qualify as a trending stock. Now, if we see a stock that is neutral or that is going down, those stocks will not make you money. So we're going to stay away from it. Remember, a stock's job is to make us money. So if it's not going up over time, it's not going to make us money. All right, so that was the T in the TDBS system, is trend, and understanding which way the stock is headed. Now, in the TDBS system, we also have the next step is D, which stands for dip buy. So again, when we identify a trend, we know the direction the stock is going. But after that, we need to know how do we get into the stock at a good price. And so our first option is a dip buy. And so again, we're looking for the dip. So again, when a stock is trending up, when a stock is heading higher, where we can connect the lows and we can see that the stock is consistently going higher, when that stock dips, that is a safe stock to buy. For instance, when the market dropped here, I bought more and I encouraged others to buy more. Why? Because this is an uptrending asset and it's dipping down to good levels, and over time it will keep rising. And so that's a very good time to buy the trend. And so that is a great way, which is D, which is dip buy. Now, for those who are like, how do I know a stock has dipped? How do I know it's going to have a good chance of going back up? Well, that's also another D. So we have the dip buy, and then that also, how do we know it's a dip buy? Well, we know D, Doji Candle. So again, we're looking for a Doji Candle. For those who don't know what that is, let me explain that real quick. Here is a prime example of a Doji candle. So again, a Doji candle is when you're coming down to a new low, you're going up to a new high, and you form a Doji candle, which is long wicks. As you can, let's stay on this page, please. Let's see if I can get back to it. Which means right here, which means you have long wicks and a small body. So what we're seeing here is this is coming down into a dip. It's coming down to a low. We see this Doji candle form, which is small body, long wicks. And then we have a strong indication that this stock is going to reverse and head up higher. So a Doji indicates a reversal pattern. So we know that the Doji or the dip is reaching its bottom when we see Dojis or multiple Dojis form, because we know that the bulls and the bears are starting to step up and we're starting to see that trend change or that reversal. And so again, again, your first opportunity to buy into the trend is a dip, and you do that by doing a doji. Here's an example to the upside. You can see here that we're reaching a new high, and you can see here doji form, and then it comes down. You can see here we're reaching a new high, and then it comes down a bit. And so again, a doji can be played both to the upside and to the downside. And so again, we're one in the TDBS system. We look for trend. Once trend is identified and the trend is up, then we're looking for our best place to enter, and that is through a dip buy, and we do that by looking for a doji candle. Anyways, please take note because that is some really important stuff. All right, number 3, TDBS, trend, dip buy, and then we have breakout, right? So if we can't buy on the dip, the next best place to buy is the breakout. And how do I know this? This is the exact system that the turtle traders used. They bought breakouts. They looked for quality trending stocks breaking new all-time highs, and they bought it above the break of the new all-time high, and that's how they knew it was going to do well. Here is a prime example of this right now, right? We have a yearly high right here at 454. The S&P 500 crossed above this level, and now you can see here it's already headed higher. And why is this? Breakouts show momentum, breakouts show trend. So we already know it's trending up, and a breakout gives us a good level to buy in, where a lot of buyers are also going to come in as well. So again, the TDBS system is trend. Identify that the stock is going higher. D, buy on the dip buy, which is your best opportunity. But if the stock is not in a dip, or there is no doji candle present, then look for a breakout that is breaking above prior resistance or yearly highs. And so here's a great example of that right now. After that, we have what is known as stop loss. So TDBS, trend, dip buy, breakout, stop loss. And a stop loss, why? Because we need to protect our downside. Guys, this is a game of odds, and this is a game of probability. And in order for that to work, we need to make sure that our losers are small and our winners are large. And the way we do that is through a stop loss. So if you don't set a stop loss, or if you move your stop loss, here is my word to you. Stop doing that. All right, guys? You need to be honest with yourself. You need to set a stop loss, and you need to keep it. And so again, by default, you'll want to set a 3% stop loss, but I'll actually be going that into more in depth because again, a stop loss changes with each stock, and I want to teach you exactly how to set it and how to use it the right way. So I'm going to teach that all in video number 2. So please stay tuned for that because that's going to be awesome. So I just wanted to let you know about that. Like literally video number 2 will teach you step by step how to do a stop loss along with some other amazing things. So make sure you stay tuned for that. But anyways, you want to make sure that you set a stop loss because that can help protect your downside and also help protect profit, which is freaking amazing, and it does it for you 24/7 for free. Anyways, guys, that is the bare essentials of the TDBS system. 1 is T, look for the trend. Look for a stock that is going higher because you want a stock that will increase in value. 2, look to buy on a dip buy. That is your best chance to buy a great stock at a low price. And how do you know it's a dip? Well, you're looking for a stock that is going down, and then you're looking for a doji candle to form. Next is if you can't buy on the dip buy on the breakouts. That's going to be above a yearly high. Next, we're looking to set a stop loss to protect our downside and the money we work so hard to save and to invest. And we're also going to protect our upside as well with that. And so again, that is the TDBS system, and that is what I wanted to teach you today. And so I hope you took a lot of notes because that is literally the most useful stuff. And you start implementing that today, I guarantee you'll start seeing a change in your portfolio. Like seriously, go to your portfolio stocks if you currently own stocks and do the trend assessment on it. Look, is the stock trending up? And if your stock is not trending up over at least 2, 3, 5 years, then you may want to cut that stock loose. Anyways, so that is the TDBS system. Now I want to give a ton of examples to prove this fact. So okay, let's start off with for my investors. All right, let's say you're an investor. How does this work for you? Simple. You do exactly what I just showed you right here. Right, when you're investing your money, you want to make sure that it goes up long term, and the company's financials are highly correlated to the performance of the stock. What do I mean by that? I mean that if a stock is trending up for like over 5-10 years, then the financials of the company are strong and they are continuing to improve. And so again, that is what we're looking for. So we're looking for it to do well over 10 years. And so that's exactly what we're seeing here. And so again, from an investing perspective, how do we look at this? We want to make sure we are on the daily chart. We want to make sure that each candle represents one day so that we see the big picture. Because when we're investing, we want to see the big picture, and then we're just going to follow the same system. We're going to buy the dip or we're going to buy the breakout. Now, how does this also work as investing? So let's say you found a stock you love. So for instance, we're looking at SPY or Microsoft or Apple or whatever whatever ETF or stock you love as an investor. You now know how to assess if that stock is trending up and you only want to be investing in those. And two, you now know how to buy more. Like if you initially buy on the dip or breakout and you have more money because you're slowly investing more and more over time, guess what? Now you know how to identify a dip buy, and you can now get in at great levels to lower your average price and increase your returns over time. So as an investor, you need to make sure you are following the trend, because that is how you're going to make a bulk of your money. And so yes, make sure you are following the trend as an investor. As a swing trader, you can actually do this as well, right? You can use it on the daily chart. That is what I use. I use swing trading on a daily chart, and my holds go from about a month to 3 months, and I make a decent return. I make about 10 to 15% return on my good stocks, and so that's typically what we're looking for as a swing trader. But again, this system works, and it's all about the time frame you use. So if you're more of a faster swing trader, guess what? Use this same system on the hourly chart. Look for the trend. Look for the trend. If it's not trending, then you're not going to do anything. Look for the dips. Yes, Doji Candle still play into effect on different time frames. All the stuff I taught you work on different time frames. So if you want to trade more actively, if you're more of a day trader, do this exact system. Follow the TDBS system on the 5-minute chart, and it will work. So guys, I just want to stress the point that what I taught you are basically some universal truths of how following the trend works and how people have been doing it for centuries, and how this is based on market psychology and based on how trends and how the market moves. And because of that, this system and this strategy will almost always work, especially in the long term. So again, if you are a day trader, if you are a swing trader, if you are an investor, this works for you. You just have to make sure that you're looking at the right time frame for you. Also, if you're an options trader, for instance, you do options and you're looking at credit spreads or selling or anything like that, guess what? You still need it's still great to have a directional bias, and this helps you know the direction bias that you should have. Anyways, that is the examples of the TDBS system and how it works. And so in addition to that, I'm going to walk you through something so amazing. Literally, this is when I figured this out, when I put this together, it literally started changing my returns. Like, it literally increased my returns by at least 5 to 10% a year. And so I want to show you this too, because it's very useful. It's how do you sector rotation to actually gain an unfair advantage in the market. And so again, we're going to take everything we just learned and apply this in a sector rotation way. So ideally, what we identified here, what we've learned, is the TDBS system, and we're going to use that system to identify what kind of market we're in right now, and then we're going to use that in sector rotation. So let me start jumping into that right now. So we need to, first off, we need to look at the S&P 500, which is an ETF. It is SPY, SPY. This tracks the overall market, and it shows us how the overall market is performing. And because of that, it gives us a good direction of knowing, are we in a bull market? Are we in a bear market? Are we in a neutral market? All right. So let's define that real quick. A bull market is when we're seeing a trend up like this. A bear market is when we're seeing a trend down, where it's going from the top left to the bottom right. That is a bear market. Neutral is where it's going sideways. And so once we're able to identify what the market is currently in, or what SPY is currently doing, then we can know the best sectors to go into. So here we go. Right now we're looking at SPY. We're assessing this right now in the moment. This shows us that we are in a bullish market, right? We are trending up. And now that we know that, we can take that. Now again, we can also kind of come in here and see that we've been in a bullish market for a while. So we're probably in a mid to late bullish phase, right? This here would be early bullish phase. This is probably mid/late. And so now that we know what phase we're in, we're going to come here to a sector rotation chart. So here is an example of a sector rotation chart. If you want to find this, just go on Google and type in sector rotation, go to images, and you'll find a bunch. So anyways, like we said, we are in a mid to late bull market. This red line shows our market. So again, if we're in a bear market, this is what it looks like. If we're in a market top or there, again, we don't know if we're in a top yet or not. So as we can see here, we're in a mid bull market to end bull market. So we're somewhere in this phase, which means that our top sectors to look at are going to be technology, industrials, basic materials, energy, and staples. So here are the sectors we're going to look at. Now that we know the best sectors, and again, guys, I'm going to explain why this is important in a second. Once we know the best sectors, then we know the best stocks to get into. And guys, why is this important? Why is what I'm teaching you important? Well, you need to know what the overall market direction is, because that's going to affect your whole portfolio. And also, The idea of trend following is following the big money, following the power, following the momentum, and following the trend. And if we can find stocks that are super strong right now, then we can actually have the opportunity to follow the trend on some amazing stocks and make some really quick money in a very safe way. And so this is going to help us find those strong stocks. So again, now that we know the sectors to look into, we can go to a sector heat map. I would go out to either a week or month performance, up to you. Right now I'm on the week performance. Again, to find this, all you have to do is type in stock market heat map and you can find one. And so again, now we know what we're looking at. We're looking at technology. We're looking at industrials. We're looking at consumers. Consumer non-durables, probably consumer staples right here. Okay, so let's take one out of the blue because everybody knows tech, right? So let's take consumer staples. Commercial services. Yeah, that's not it. Let's take consumer durables. Yeah, let's take this. Okay, now that we know this, what do we do from here? Well, we look at the stocks that are performing best. So again, we have Tesla performing well. We have Activision performing well. We have TTWO performing well, or T2 performing well. And now what we're going to do is we're going to take these stocks and we're going to assess them. So let's take an example of TTWO. So we can see here, and now we're going to zoom out and we're going to assess it on a trend following method. We're going to look at the trend. We're going to look at everything else. Now again, this trend is not the best. You can see here because of the way that it's trending, it goes up and down a lot. But again, you can see here we do have that dip, we do have the doji formed, and that was a nice breakout that we missed. But anyways, that's kind of how we find these stocks. So let's get a good example here. Technology is performing well. So let's go to electric technology. Let's find a stock that is performing well here. So we have STX. This again is a weak performance. AVJO, LMT. Let's check out LMT. I believe is Lockheed Martin. Yeah, LMT. You can see that here. You can see here that it does not trend well, which is totally fine. Again, this is not something I pre-figured out the best stock. But again, I just want to show you an example of how this works. So again, sometimes there are duds. But here's a great example is finding advanced micron devices. So basically what we did is we assessed where the market as a whole was, finding the best stocks for that sector, or finding the best sector right now, and finding the best stocks in those sector. Now again, there are way more easier ways to find stocks, and again, that's what we're going into in video number 3. I'm going to show you step by step how that all works. And so literally I'm giving you my exact criteria to find stocks before they break out, and it's literally amazing. So make sure you watch video number 3. But for right now, here's sector rotation. And if you start to implement it in the way that you pick stocks and the way that you align stocks based on certain market criteria, you're going to automatically increase your returns. So make sure you check that out. Anyways, guys, this is the TDBS system with examples and with sector rotation explained, and I hope that makes sense. Again, if you have any questions, you can actually leave them in the comments below. But yeah, so anyways, let's jump back to the content here real quick. So again, does this actually work? Does trend following actually work? And again, we have literally 2 centuries of data of research. We have a new one which shows a century of evidence of it working. So this is something that does work. We have the examples of the turtle traders, which literally took people who knew absolutely nothing to literally doubling their money every single year, which is insane. So again, do we have any real examples? Well, again, I just showed you some stock examples, but for people, we have a ton of examples. Bruce Kovner is worth over $5.3 billion. John W. Henry worth $2.1 billion. He uses money actually by the Boston Red Sox. Anyways, Bill Dunn, $80 million. We have Michael Marcus, who turned an initial $30,000 investment to $80 million. And again, we have all these trend followers who have generated tremendous wealth in one single lifetime because of trend following. And I know that you can be next. Like, if you want to change your financial future, if you want a better life for your kids and for your family, and you want to just achieve a better and overall safer return from the market, trend following is going to be your key to doing that. And so here's just a list of more people: Bill Dunn, Ed Secoda, Dave Harding, Salem Abraham, Larry Height, Kevin Bruce, Richard Dolchain, Gary Davis. Like, I don't need to say all these names, but you can actually go and research these people and read their stories. But it's true, these are just people. These are normal people who learned a trend following system and have now seen some amazing results. And I know you can too. All you have to do is start implementing this TDBS system, and you can start right now on your portfolio. So again, here are some examples how it works, right? This is an example. The stock was trending higher. They knew it. It matches the T. dip buy. It was not in a dip buy yet, but it did reach that breakout criteria. It broke above that high. They bought the breakout, and then they traded up with a stop loss. That's exactly how this works, and this is a sample of a turtle trader trade from the 1980s. And so again, I just wanted to show you this is exactly what they were doing then, and it works now. So you say, what if I'm not a swing trader, Austin? I'm more of an investor. I'm more of a long-term investor, or I'm more of a day trader, or I'm more of an options trader. Well, I hope I showed you that it works for everyone. You just change the time frame, and this system will work for you. So guys, this works for everyone, regardless of if you're an investor, swing trader, a day trader, you've been in the market for years, or you're a complete newbie. This will work for you. So guys, if you love the idea of trend following but are still scared of the next stock market crash, then make sure to watch video number 2, because in video number 2, I'm literally going to explain how to protect yourself from the next stock market crash. I really hope you enjoyed this video. I tried to give away as much value as I could, literally stuff and content that I charged like money for before. So if you enjoyed what you just learned, and if you took away a lot, please let me know in the comments below. You can actually scroll down to the bottom of this webpage. Actually like comment, and so I'd love to read those, and it's going to help me put together the next video. Anyways, guys, video number 2 is coming out November 22nd at 5 p.m. CST. So make sure to stay tuned for that, because again, as I explained, I'll be showing you how to accurately predict a stock crash and how to protect yourself from it. And not only how to protect yourself, but I'm also going to teach you how to make some money on the way down as well. And so before you go, leave a comment below and let me know if you love trend following, and we'll start using it. Also, this is huge, guys. Is I am literally, because of the holiday season we're in, and Black Friday and Thanksgiving and whatever, I wanted to do something extremely special, especially because it's the Impeccable Stock Software 1-year anniversary coming up very soon. And so I wanted to give away a new MacBook Air and also $500 of cash. So I wanted to give you all the resources you need to get started. So I'm going to give you a laptop. I'm going to give you a year access to the Impeccable Stock Software, and I'm going to give you $500 of cash to start with. And so guys, with that, this is literally one of the biggest giveaways. There's only one winner, so click the link below. You just have to create an account by putting in your email, and you just do things. It is a contest, by the way. So again, it is a giveaway, but there are ways to increase your name in the bucket. And so by doing that, it's just by sharing and by doing other simple tasks as well. So guys, thank you so much for watching this video. I hope you enjoyed. Let me know if you enjoyed it in the comments below. Please check out your chance, guys. Literally signing up for this this giveaway will give you like 10 entries. So make sure you take advantage of this, because this is completely free. I will ship out a MacBook Air to you and PayPal you cash. So guys, anyways, I want to make sure that you have everything you need to succeed and learn in 2021, even though this has been a crazy year, so that in 2022 you can freaking crush it and start to change your life. Anyways, guys, once again, thank you for watching. I will see you in the next video, November 22nd at 5 p.m. Central Standard Time. If you have not put your email in yet, find the email option so that you get notified of the next video. All right, guys, see you in video number 2.